session of accounting. Today we are looking at financial statements. Financial statements as our topic. Financial statements. What are financial statements? These are documents that show the financial position of a business. For example, they show the profitability. So mainly they show what is your business, the amount of capital you have. So those are financial statements. And in accounting we have various financial statements. So the categories. One, we have the income statement. Stroke statement of profit. Statement of profit, loss, and other comprehensive incomes. The second one is the balance sheet. Stroke statement of financial position. Financial position. We also have statement of changes in equity. Statement of changes in equity. And we also have the cash flow. Cash flow statements. Basically today I want us to concentrate on these first two. The income statement and the balance sheet. So what is the income statement? These are documents that show the purpose of the income statement, to show the profitability of a business. So why do we prepare income statements? Mainly, the main purpose, there are other reasons, but the main reason is to show the profitability, to know whether the business makes profits or losses. Because at the end of it all, we get the net profit or the net loss. Components of an income statement. Components of an income statement or statement of financial position. One, we have the net sales. What are net sales? This refers to the net revenue, what the business has sold over a given financial year. And it is given by, so net sales to net revenue. It's the excess of the revenue over the returns equals to sales. We know sales, what you sell in the business, minus return inwards. What are return inwards? Return inwards refers to all those goods that customers have returned back into the business for various reasons. For example, expiry of goods, wrong size. So to get your net sales, you get whatever goods that you sold minus what customers returned. So to give you the net sales. Another component is cost of sales. Cost of sales. What is cost of sales? Cost of sales refers to the amount of money used by the business to purchase what was sold. So incurred in obtaining what was sold. Remember, cost of sales. The goods you sold, how much did they cost? The amount of money used by the business to acquire what was sold. And is given by the formula, cost of sales equals to opening inventory. Stock. What is opening inventory? The amount of goods the business has at the beginning of the year, of a given financial year, plus net purchases minus closing inventory. Cost of sales equals opening inventory plus net purchases. Opening inventory is what you have at the beginning of the year. Closing inventory at the end of the financial year, what remains in the business. Then, but we are seeing another new term, which is net purchases. So let's first talk about it. Net purchases. Just like we got net sales, so we also have got net purchases. All your net purchases, what you sold. And net purchases is given by purchases. Whatever goods you purchased, you add wages. Let me underline this one. Purchases, add wages, add carried inwards. Then you less minus return outwards. So to get net purchases, you get the purchases, whatever you purchase. Then the wages, these expenses incurred in purchases. For example, if I deal in hardware and I go to buy cement, purchases are goods that bought by the business for resale. Whatever good that you buy for resale is a purchase. What you don't buy and whatever you buy and you are not going to sell it, it's not a purchase. So in this business, these are pains and these are purchases because I buy them for resale. So, but distinguish between purchases and assets. I'm repeating, purchases are goods bought for resale to make some profits. Then we have wages, the expenses incurred. Maybe, for example, I was giving for the purchases, I'm assuming I'm dealing in hardware and I buy cement. So we are looking at this amount of money I'm paying to people who are going to carry the cement, maybe to the hardware. That's what we call purchases. Carried inwards, it means transport and purchases. That's why it also goes transport. Still, if I'm using the same example of cement, that cement from the hardware where I'm buying it to my hardware, I will incur some transport. And that's what we call carried inwards. Then return outwards. These are the goods the business returns. These are goods the business returns to the seller of the business. For return inwards, we saw the customer returns to the business. But for outwards, you bought some goods and for some reasons, maybe they were not satisfying, you return them to the seller. So that's the formula of net purchases. Then another component of income statement, we have the gross profit. Gross profit equals to net sales minus cost of sales. And we already saw how to get the net sales and the cost of sales. Then the net profit. Last we have, gross income. From the gross profit we have the gross income, which is gross profit plus other incomes. Then we also have lastly the net profit. The net profit equals to gross profit gross income minus other expenses, minus operating expenses. Incomes minus operating expenses. So these are the components. Let's quickly look at the format of the income statement. Format of the income statement. We are looking at the format of the income statement. So you may drop this details column shilling depending on the country where you are. Now, like me who's in Uganda, we always use shilling. I should have some zeros. So you may use either 2 columns or 3 depending. So this is the format we begin with. The first formula is net sales equals to sales minus return inwards. So this is what you should. So that's why you say, so you apply you derive this format based on the formulas. So net sales, that's why sales returns, return inwards. So this is my digit and this is my return. I have to put it in bracket to show that I'm lessing. If I put here less, for example, if I say sales less return inwards, there is no need of putting a bracket here. But if I put sales then returns, that's why I'm putting a bracket. So my sales minus return inwards, you end up getting, since they are sum giving us, we are getting the net sales. But as you advance, you'll be putting this value straight here. No need of writing the net sales column. But for just purposes of running, let's put it here. So now the first formula is used. The first formula is done. Sales minus return is equal minus return inwards equals to net sales. Then the second one, we are going to cost of sales. Remember, gross profit equals to net sales minus cost of sales. Sorry, there's something I forgot to tell you. In case the question doesn't give you the returns, just bring the sale. Your sales become the net sales. Just in case you have no returns in your trial balance or anywhere. So the question hasn't given you, your sales becomes the net sales. So we are lessing cost of sales, and we say the cost of sales equals to opening inventory plus net purchases minus closing inventory. So what does this mean? So you say opening inventory x add purchases. You may add purchases. So let me first put it here, but just in case, then you add wages. Remember, I'm aiming at getting the net purchases. Add the carriage inwards. And then less returns. Here you only put wages. If it's wages and salaries, don't put it there. Wages and salaries are expenses, and you put carriage inwards. Returns, you put in the bracket. So you get your net purchases. So your net purchases. So lastly, less the closing. Sometimes you get the goods available for sale, but you may skip it. Goods available for sale is here. Goods available for sale equals to opening inventory plus net purchases. So sometimes, but you may skip it. Then you less closing inventory. Closing inventory. So the value you get will be the cost of sales. So cost of sales, I say, opening inventory, add net purchases to get the goods available for sale. The value you get, you less closing inventory to get the cost of sales. What is the purpose of this? In case the first column, in case there are some additions, not to over-congest your work. But just in case the question has provided the purchases alone, just bring it straight to the next column. Whatever that has not been given, eliminate. Then, therefore, we have our net sales and we have our cost of sales, because it's what we've been finding. We can be in position to get the gross profit. How do you get the gross profit? Gross profit equals to net sales minus cost of sales. Therefore, you get your gross profit. And lastly, you add other incomes. You add other incomes. You add other incomes. For example, discount received. Discount received. We may have rent income. There are many incomes. So you add them from there, as we shall look at more in our subsequent sessions. So to get the gross income, when you get the gross profit plus other income, you get the gross income. Then you less the operating expenses. Other incomes, sometimes they call them miscellaneous income. So the operating expenses, you may have the rent as an expense. Remember, rent can be as an income, and at the same time it can be as an expense. So you can also have depreciation as a common income. So you add them and more other incomes because they are quite many. So therefore, once you less, you get total. This is the total income. So once you less, you get the net profit. This is the net profit. So this is all about the income statement. This is all about the income statement we are introducing. So in case you need more questions, for more inquiries, I'm Langton Dumba from Chambogo, Banda, at Langton Academic Solution. The contacts are here. You can always inbox us, WhatsApp, or call us for more inquiries. Now, next session we shall proceed with the balance sheet. Bye bye.